Hey everybody, this is Jim at SP500chart.com. I'm coming to you from a hotel room in Nashville, Tennessee, USSA. And we're going to take a look at the chart of the S&P 500. But first, got to remind you that this website is for educational purposes only, as well as the video. This is not to be taken as actual investment advice because I am not a licensed financial professional. I'm just a guy who draws lines on charts. You have to make investment decisions that are suitable for you and your risk tolerance and your emotional makeup. So I can't make up your mind what you need to do with your investments or with your trading, but I do like to read charts, and if you're game, let's take a look. Well, we're looking at an hourly chart, and we've been watching this neckline right here. And as you can see, today we got what is a break of that neckline, and it is technically significant. Now, what's interesting is this does not this head and shoulders pattern, left shoulder, head, right shoulder, with the head also being comprised of a triple top, just like the last Head and Shoulders we had, by the way, earlier in the year. The one thing that's missing from this pattern, and you can probably tell it by looking at this chart, the only thing that's missing is symmetry, okay? We had about a month on the left shoulder, we had a month and a half on the head, and now we've had 2 weeks, tops, on the right shoulder. Now you might say, well, what about those 2 days where the markets were closed last week, those 2 days that threw me kind of for a loop? Because when I was doing the weekly review, I kept going, wait a minute, where'd my week go? And then I just totally slipped past me that we had a Hurricane Sandy that shut the markets down for 2 days. But guys, this is again going to be a fairly simple video because all we can do now is call it as we see it. This is a truncated, that's fancy for short or shortened, abbreviated right shoulder. It doesn't look exactly right, but it did break down. And again, like I was mentioning yesterday, you go into a presidential election and you just have to be prepared for trend lines to take a beating and a battering one way or the other. You know, if Romney had won, we might have found ourselves today up at 1456. I kind of suspect we would have rallied. But eventually, I think the chart still would have played out in the long run, but I think the election served as the immediate impetus to push the market beyond some boundaries. So if we look now at let's try a 10-minute chart, you can see that here's our neckline. We got a little bit of an initial bounce early on. The market rallied to over 1410. Then it just came through. We had this gray support line, which I'll remind you was drawn. Well, I'm going to have to back up a little bit more. See if 2-hour chart does it. Yes. That gray trend line was actually extended from these two lows back here in June and July. Don't know how super critical that is, but it seemed worth putting on the chart. Then we've got this this blue trend line right here that is perhaps more important. And I think we got to go to a daily chart for this. See, that blue trend line was drawn over the October 3rd lows of 2011 and the late May and very early June lows of 2012. So we are now below this line, and I think all of this is pointing to we head down to the low 1300s, and once there, we hopefully will get a sign of some type, that a bottom pattern is being put in there so we can trade that with a reasonable amount of confidence. You can never do it with absolute confidence, okay? I would never pretend that, oops, sorry about that, never pretend that could be done, but with reasonable confidence. By the way, if we're measuring this head and shoulders top, we now see that since we broke out or broke down from the pattern today, we now have a projected downside target of roughly 1338. Keep in mind, these are minimum targets based upon the pattern. Now, the one thing that gives me just a little bit of pause is the fact that this did break down prematurely. So it is possible that we could get a momentary save or to jump back into this pattern, but I think the fact that this neckline broke would mean any such move would only be short-lived. So guys, now with that neckline broken, even though it's not perfectly symmetrical, I am looking for an eventual downside target of 1338 as a minimum, and I would not be at all surprised if we get down into the 1320s or even slightly lower, as we have this rising red line that is the line drawn over our major, what I would consider our two major bottoms in this market. These were really the two bottoms that showed the highest degree of panic, and that was March 9th, 2009 and October 3rd, 2011. So you can see that line right there, and that just happens to line up not that far underneath where this pattern is pointing us to. So guys, that is the video for November 7th, 2012. And look, I want to extend my condolences to the capitalists out there who believe that capitalism is capable of doing great things to advance freedom, technology, and standard of living. My condolences to you, as I feel your pain with the result of the elections yesterday. And guys, you know, I try real hard to keep politics out of this, but I think you have to man up and say that with the re-election of Barack Obama and with the extension of Democrat control of the Senate, and with the direction that the Democrat Party has been going in over the past 4 to 8 years, or even longer, I think you have to say that they've got a big target drawn on capitalism as a way of governance, as a way of economic, what's the word I'm looking for? Economic framework. So it just looks pretty sad to me right now. So anyway, I'm not going to let that color what I'm doing with the chart, however, because whatever degree the elections have a real impact on the stock markets, we will still be dealing with a chart that will likely, as it has been for decades, if not centuries in some markets, it reveals itself through the constant repetition of patterns that are indicative of human behavior. So that's what we do here. Hey guys, thanks for watching. Take care, and I wish you well.